Hello students, we are solving problems under assessment of firms. We solved problems relating to calculation of book profit and business income of the firm. In this session onwards, let us solve full-fledged problems, that is calculation of book profit, business income, total income and tax liability of the firm. Let us go through this problem. See, A, B and C are working partners in a firm sharing profits and losses in the ratio of 3:2:1. From the following particulars, compute the total income of the firm, tax payable by the firm and taxable income of the partners from the firm for the assessment year 2020-21. Profit and loss account is as follows. First, see the credit side. By gross profit rupees 2 lakhs. Then by interest on securities, gross amount is given 18,000 and income from house property 20,000. Dividends, gross amount is given 10,000. Capital gain, short term 8,000 and long term 10,000. These are the income from various sources other than business income. Next, see the debit side. To sundry expenses 1,69,500, to salaries A 10,000 and B 15,000 and to commission to C 24,000, to interest on capital at 20%, A 6,000, B 8,000 and C 1,000. So, net profit is there, that is credit side is more than debit side. Net profit amounts to rupees 32,500 and total of your profit and loss account amounts to 2,66,000. See the additional information. Sundry expenses include outstanding GST 800, expenses incurred for obtaining the loan 2,000, donation to National Children's Fund 5,000, payment of 25,000 in cash, customs penalty paid 2,500, interest on loan paid to the wife of partner A 4,000, depreciation on car at 20% rupees 25,000 and depreciation on computers at 25% rupees 10,000. The car was used for personal purpose to the extent of 40%. LIC premium on the lives of partners 10,000. Next, see, A paid rupees 3,000 as interest on money borrowed for investment in the firm, and under income tax rules, depreciation allowable on car and computers is 15% and 40% respectively. So, this is the problem which may appear in the exam for 24 marks. Here you have to compute total income. See the first paragraph. Total income of the firm, tax payable by the firm and taxable income of the partners. Before solving the problem, please go through the format which we discussed in first sessions. Go through that format, pro forma of computation of book profit. Under that, see, to the net profit as per profit and loss account, you have to add disallowed items not covered under section 3244D and remuneration to partners if debited to profit and loss account and disallowance of interest in excess of 12% per annum. Remember this much. To the net profit you have to add 3 items. First one, disallowed items. Second one, remuneration to partners which are debited in profit and loss account. All salary or commission etc. you have to write, that is you have to add to the net profit, and disallowance of interest above 12%. These 3 things you have to add to the net profit and 2 things you have to deduct, that is Admissible items which are disallowed in profit and loss account. The item which you are supposed to enter, but you disallowed that item in profit and loss account, that you have to deduct, and income from all other sources credited to profit and loss account, that is income from house property, income from capital gains, other sources, etc. So, when you do that thing, you arrive at book profit. Next format is to compute total income, that is book profit of the firm you have to write, and from that you have to deduct remuneration paid to the working partner, and you have to add all income from other sources, that may be from income from house property, capital gains, other sources, etc. You arrive at gross total income, and from gross total income you have to deduct section 80 deductions, you arrive at total income like that. Okay, that is the format of calculation of book profit and total income. Let us go through the problem as per your format. Okay, see this problem. Profit and loss account is given in the problem. A, B, C are three working partners sharing profit and losses in the ratio of 3:2:1. Go through your profit and loss account. Here, as per your format, see the format and the problem. See second one, remuneration to partners. If debited to profit and loss account, you have to add to the net profit. In front of remuneration, write add to the net profit to calculate book profit, that is salary to A, salary to B and commission. These three are remuneration, you have to add to the net profit, put the plus mark in front of that, and interest on capital in excess of 12% per annum, you have to add to the net profit, that is interest on capital of A, B, C, that is 6,000 into 8/20, 8,000 into 8/20 and 1,000 into 8/20, that 8/20 percentage you have to add to the net profit and not whole amount. Okay. Next, you have to deduct all income from other sources, that is interest on securities you have to deduct from a net profit, put a minus figure in front of that, and income from house property you have to deduct from net profit. Dividends, that is gross amount, you have to deduct from the net profit, and capital gains also you have to deduct. Next, see additional informations. Sundry expenses include, here you have to deduct all disallowed items, and you should not deduct those expenses which are actually allowed in the firm. Okay, here outstanding GST. Here I will say which are allowed and which are not allowed. Okay, here see first one, outstanding GST is disallowed and you have to add that to the net profit. Next one, expenses incurred for obtaining the loan is allowed and no need to do any adjustment relating to this. And donations to National Children's Fund is disallowed expense and you have to add that thing to the net profit. And one more adjustment is there for this deduction under section 80G, that is without limit 100% National Children's Fund, that is from the gross total income. While calculating total income, you have to deduct this donation to National Children's Fund. So, two adjustments are there. First one is you have to add this as disallowed item, and another one is you have to deduct it from gross total income. Okay. Next one, see payment of 25,000 in cash. Here remember one thing, cash payment above 10,000 is disallowed under section 10 subsection 3, that is under section 40A subsection 3. Please make that correction. Cash payment above 10,000 is disallowed under section 40A subsection 3. Okay, here cash payment is in cash rupees 25,000. Cash payment is 25,000, but above 10%, 10,000 is disallowed. So this 25,000 is disallowed. You have to add this thing to the net profit. Here your aim is to increase your net profit. That is why you have to add all that expenses to the net profit. Okay, here you have to add this 25,000. Next one, customs penalty paid. This customs penalty paid also disallowed, so you have to add that to the net profit. Next one, interest on loan paid to the wife of partner A. Here interest paid on loan. Here wife of a partner is outsider to the company and they have to pay interest on loan to them. Here interest on loan is allowable item and you should not do anything with this one. So you can ignore this one. This is actually allowed. It is included in sundry expenses. So no need to do any adjustment to this. Next one, see, depreciation on car at 20%, that is 25,000, that is depreciation on car is 25,000 and the rate is 20%. So you have to calculate the actual amount of car and depreciation on computers at 25%, rupees 10,000, that is amount of depreciation on computer is 10,000. So you have to calculate 100% of this value of computer also. The car was used for personal purpose to the extent of 40%. And see the third point here. Third point, under income tax rules, depreciation allowable on car and computers is 15% and 40% respectively. As per the rules, depreciation allowable on car is 15%, but they charged depreciation at the rate of 20% and depreciation on computers 40%, and here they allowed only 25%. You have to adjust this thing. You have to deduct these excess of your depreciation from the net profit. Let us discuss about this depreciation while solving the problem. Okay, note down this depreciation. Here you have to deduct depreciation on car, that is excess. Here 100% of the value of car you have to calculate and 100% of value of computers also you have to calculate. Very easy. 25,000 is 20%, then what is 100%? Cross multiplication you have to do. 25,000 into 100 by 20. The value of car amounts to rupees 1,25,000 and value of computers amounts to rupees 10,000 into 100 divided by 25, that is 40,000. That we'll study that later. Okay, next go through next one. LIC premium on lives of partners 10,000. It is also disallowed because here LIC premium on their lives, that is not business income, so that is disallowed. You have to add that to the net profit. Next, see, A paid rupees 3,000 as interest on money borrowed for investment in the firm. It is allowed, so no need to do anything relating to this, and you should write this interest on money borrowed for investment in the firm while calculating taxable income of partners. Okay, here to calculate taxable income of partners, that is their personal income, you have to deduct this one because here it is expense to Mr. A and it is income to the company. That is why it is allowable income to the company, that is to the firm. That is why you are not doing anything relating to this amount in the company, because here you have to do adjustments to the allowable items only, and it is expense to the partner. That is why you are deducting it from the income of a partner. Next, see, under Income Tax Act rules, depreciation allowable on car and computers is 15% and 40%, that we will discuss while solving the problem. Let us solve this problem. First, you have to calculate the business income. You know how to calculate. To the net profit, you have to add all disallowed items, and also you have to add remuneration to partners if debited to profit and loss account, and also interest on capital above 12%. Let us add all that disallowed items to the net profit. First, you have to write net profit in the last amount column 32,500. To that you have to add all disallowed items. First, you have to write salary to partners, that is A and B, 10,000 and 15,000. So, the total of salary amounts to 25,000, right in the second amount column. Next, commission to C, 24,000. Interest on capital above 12,000. These things we already solved in other problems. So, you know about this. Interest on capital above 12,000, 12% amounts to 2,400, 3,200 and 400 respectively. So, the total of these three things amounts to rupees 6,000. Next disallowed item is outstanding GST 800. Next, donation to National Children's Fund 5,000. Next, cash payment above 10,000 is disallowed under section 40A subsection 3, that is 25,000. Here up to 10,000 is disallowed and above that is disallowed, not like that. If the cash payment exceeds 10,000, entire amount is disallowed. Okay, that is why 25,000 you have to write. Next, customs penalty 2,500. Next, see here depreciation, here 25,000 and 10,000. Here you have to write it as disallowed. Okay, that is 35,000. Here you have to write like this. Then you have to deduct the amount which is actually allowed, or else you can show the calculation directly, but it will be easy for you. That is, first you have to disallow all depreciation and then you have to adjust as per the income tax rules. That is why first you have to write depreciation amount, that is 25% of car, 1000 of car and 10,000 of computers, total 35,000, and LIC premium 10,000. So, the total of disallowed items amounts to 1,33,300. When you add this thing to your net profit is increased to rupees 1,65,800 rupees. Now, your net profit amounts to 1,65,800. From this you have to adjust the depreciation, that is depreciation on car is 25,000, that is the company allowed, but as per income tax rules only 15% depreciation is allowable on your car. That is, you have to calculate the value of the car, that is 1,25,000. 15% of that is allowable, that is 18,750 is allowable amount of depreciation and not 25,000. And see that statement in the problem, that is the car was used for personal purpose to the extent of 40%. That means here again 40% used as personal use is disallowed. You have to deduct that 40% depreciation from the actual depreciation. That is, from 18,750 you have to deduct 40%, that is 7,500 rupees you have to deduct. So, the total depreciation of car allowable is 11,250. Okay. Next, see, depreciation on computers actually allowable is 40%, but they allowed only 25%. Now, you have to calculate the whole amount of computers, that amounts to 40,000, and here allowable depreciation as per income tax rules is 40%. 40% of 40,000 amounts to rupees 60,000. So, you have to deduct that much of amount from net profit, that is expenses actually allowed in the firm. So, when you deduct that amount from 1,65,800, you get net profit as 1,38,550. From that, as we discussed while discussing the format, you have to deduct income to be treated separately, that is all income from other sources, that is income from securities 18,000, income from house property 20,000, dividends 10,000 and capital gains both short term and long term 18,000. So, the total of income to be treated separately amounts to 66,000. So, when you deduct that thing from the net profit 1,38,550, you get book profit of 72,550. So, you refer the format and you solve the problem, you will arrive at this book profit, that is 72,550. That is, to the net profit you have to add all disallowed items and remuneration and interest on capital above 12%, and you have to deduct all admissible items. Here admissible item is depreciation, that you have to deduct, and income to be treated separately. You arrive at book profit. So, to arrive at business income, you have to deduct working partners remuneration from the book profit. Here there is net profit, so the book profit will be the working partners remuneration will be least of the following, that is actual remuneration or 90% of book profit or 1,50,000. Here actual remuneration, that is 0.1 or 0.2, whichever is low, that is 0.1 or 0.2, whichever is low, but under 0.2 whichever is high. Here whichever is high you have to consider, that is 90% of book profit. The rule you know, I am not going to explain it again. 90% of book profit 72,550, that is 65,295 or 1,50,000, whichever is high you have to consider. Here 1,50,000 is high, that is why you are considering 1,50,000. Out of 1, that is actual remuneration or 0.2, this 1,50,000, here you have to consider whichever is less. Whichever is less you have to consider. Here 49,000 is lesser. So, when you deduct this 49,000 from book profit, you get business income as 23,550. So, the business income of the firm is 23,550. Okay. Next, you have to calculate the total income. Statement showing total income, you already prepared this one under assessment of individuals, that is income from all 5 heads you have to write. You arrive at gross total income, from that you have to deduct deduction under section 80. So, here income from house property is given, that is 20,000, business income is given 23,550, capital gains short term and long term is there 8,000 and 10,000. 18,000, and income from other sources, interest on securities 18,000, and dividends from Indian company is exempted. So, the total income is, that is gross total income is 79,550. When you deduct deduction under section 80, that is 80G, without limit 100% donation to National Children's Fund 5,000, you get total income as 74,550. So, this is the total income of the firm. Next, you have to calculate as per the instruction taxable income of partners from firm. This type of problem we already solved, that is taxable income calculation. We already solved one problem, that is first you have to write interest on capital up to 12%, that is their income. Interest on capital is the income of a partner, but in a firm only 12% is allowable. So, 12% we have to calculate that amounts to 3600, 4800 and 600. Very easy. Why? Because you know what is your 20% interest on capital, and you already calculated the difference amount. When you deduct the difference amount that you showed here, that is here, see, interest on capital, from the actual amount given in the profit and loss account, you get this amounts. Calculate that one. From 6,000 you have to deduct 2,400, and from 8,000 you have to deduct 3,200, and from 1,000 you have to deduct 400. You get these amounts. Next, remuneration to partners is the income of the partners. So, 10,000, 15,000 and 24,000. So, their total income amounts to rupees 13,600, 19,800 and 24,000. From that you have to deduct the expenses of partners. Here partner A has two expenses, that is one car expenses, that is the expense of personal use, okay, that is 7,500, and interest on loan 3,000 that we discussed. Here these two are expense to partner A. So, when you deduct that thing, taxable income of partner A amounts to rupees 3,100. So, this is taxable income of partners from firm. Next, you have to calculate tax liability of the firm. Here tax rate of the firm is fixed, that is 30%, okay, that is the normal rate of tax for the firm. Here for casual income or short term capital gain at 15% and long term capital gain, you have to apply special rate as your in assessment of individual. Here long term capital gain is there, that is tax on long term capital gain at 20%, that is 20% of 10,000 amounts to 2,000, and on balance 64,550 at the rate of 30%, that amounts to 20,865. The total tax liability is 22,865. On that you have to add health and education cess at the rate of 4%, 950. So, the total tax liability of the firm amounts to rupees 23,780. So, this is the problem. I know first you will feel a little difficulty while understanding the problem, but while solving many more problems you will come to know, it will be easier for you. Thank you. Let us solve many other problems like this in coming sessions.